Good morning, ladies and gentlemen. This is Market Forecast, brought to you by Options University. This is Butch Shorak. It's Monday, January 6, 2014. Access to this video is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading options and stocks, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Looking at the last week, let's see what we've got in our four indexes: the Dow, NASDAQ, S&P 500, Russell 2000. We see that for the week we don't have big numbers. In fact, we have negative in front of all those numbers. Dow down 0.1%, NASDAQ down 0.6%, S&P down 0.5% for the week, Russell 2000 down 0.4% for the week. Looking at year to date for 2013, we've got some lofty numbers there that go all the way from 36 to 25% in our respective indexes. So we certainly had a year to remember in 2013. What are we going to expect in 2014? Well, we'll take and analyze a little bit what happened during the Santa Claus rally and see what the last 5 days of December and the first 2 days of January gave us as far as returns. Looking at that Santa Claus rally, let's take a look and see what's coming during the next week as we look at the economic announcements that are coming this week. Looking at Monday, January 6th, we got factory orders at 10 o'clock, ISM non-manufacturing index at 10. Looking at Tuesday, we see we have not much going on. International trade coming in at 8:30 on Tuesday morning. Looking at Wednesday, ADP employment report for the previous month in consumer credit at 3 o'clock, which certainly will have no big effect on the market. Thursday, we have our weekly jobless claims report, which has certainly been stronger than expectations in October, November, and December. Looking at the monthly employment situation, we'll see what the employment numbers bring us at 8:30 on Friday, and we got wholesale trade coming at 10 o'clock on Friday, January 10th. So we've got some announcements this week, not a big week of announcements as we have entered in to the first 5 trading days of January, which certainly are one of the next things we'll look at as one of our indicators to see where we expect the market to go. Looking at the Santa Claus rally, what is it that the Santa Claus rally actually is? Well, by definition, it's the last 5 trading days of December and the first 2 trading days of January. If we look back since 1950, the average for those numbers has been right around 1.5%. Well, what did we have this year as from 12/23 to January 3rd, which is last Friday? For the close, the S&P 500 was up 3.38 points, which is only 0.2%. So a little bit below average since we've seen from 1950, but positive numbers. If we look back through history, we see on those years where the Santa Claus rally is in a decline, such as 2000 and 2008, we see that foreshadows a pullback in the market. This will be our first indicator telling us what many are saying. The 2014 forecast is for further fuel-fed gains, and we'll see whether that takes place. It's been a lack of an indicator of tough times ahead, according to the Santa Claus rally. Looking at the last 2 days, we see we had a pullback on Thursday and Friday, but we're still in that upward trend, well above the 30-day moving average, well above the 50-day moving average, doing what markets do, extending out and then pulling back. We see that we pulled back to that 50-day moving average about halfway through December, and we'll see how far back we'll pull before we begin our next move up as we go into January. We're also going to be interested to see what the first 30 days of January have to tell us as another indicator of what we can expect in the year ahead. Looking a little more carefully at the SPX, we see that on Thursday and Friday we had quite a bit of a pullback and pulling back towards this 30-day moving average. So we reached new highs and then pull back. This is exactly what markets do, and the market is showing good strength as we go into 2014. What can we expect as we move forward? Well, we certainly have had a market that the Fed has certainly helped precipitate. Even some of the Dr. Dooms, Nouriel Roubini and Mark Faber, who's the author of Gloom, Doom, and Boom, think the market has higher levels to attain. So where's 2014? Run by a new Fed chief. We may see Yellen a little bit more aggressive than what we saw out of Bernanke, but we can pretty much see the same type of time coming in 2014. Where'd the NASDAQ, the Dow end up for the week? Up 16,469.99, and we see that it had a little bit of pullback late in the week, but a nice move up and up for the down just a tad for the week, but showing us if we count back 5 days in the first 2 trading days, we're right back in here. So we've got positive numbers coming out of the Dow for the Santa Claus rally. Looking at the, in fact, let's move to our next page here. Looking at the NASDAQ, we see exactly the same kind of move as we see that it too had a bit of a pullback in the last few days and the first few days of January. Again, reaching new highs as the NASDAQ keeps chugging along. Russell 2000 pulled back to 1156, and we see that very similar, reached new highs and then a pullback as we pull back to averages. Seeing where we're going to go in January, let's look at the first 5 days to give us our next indicator of where we're going in 2014. VIX had a little bit of a pop all the way up to about almost 15 as we saw the markets pulling back. Friday, bit of a flat day as it didn't have a big range whatsoever. Looking at some of our other indicators, looking at TLT, which is our ETF for 20-year Treasury bonds, we see that they're flat, waiting to break through. Is that bond market going to keep going lower as we have a bear market in bonds? Looking at gold, we see a pop off the bottom, but understand there is no great fear in the market as heading there for safety. Looking at the spider, what kind of volume did we have on Thursday and Friday? Well, we had average volume and less than average volume. As we do what markets do, pull back and oscillate between the 30 and the 50-day moving average and new highs as this bullish market just understands one direction, and that is up. And it will continue until it stops. Will it stop? Of course it will. What's going to cause it to stop? Less support from the Fed as the economy seems to be showing good moves. If we look at employment numbers, we look at GDP, while no one would call it a fast-burning economy, it's still heading in the right direction. Looking at XLF, well, look at this. Relative strength, the overall market, as the financials we saw actually went higher on Friday as we reached new all-time highs, leading the market up. Looking at oil, look at this. We're sitting right down there at support, and let's see whether we break through. We may see that less than $3 a gallon gas yet, as USO is had a bit of a pullback from its previous highs. All right, for those of you that are gold members, stick around. We'll look at our stocks to watch, see exactly what those stocks have been doing. For those of you that are not gold members, we would love you to go to our website, optionsuniversity.com, where you might find some other free videos for you to take a look at. And with that, this is Butch Shorak. It's Monday, January 6, 2014, brought to you by Options University, and we want to thank you for being here. And here we are, 2014. The Santa Claus rally is intact, and the market is marching forward. Thank you for being here.